Good afternoon, fellow traders. I have a hourly chart, and I really want to point this out. ROKU, ROKU, yesterday was at 175. Listen carefully. From that point in today's session, the day session high was 160. So we already had a $15 pullback from yesterday's high. Now, here's the deal. We went down today to this trend line, and that low was 139.53. So we're taking advantage of buying these good quality stocks. We see that ROKU is better than Netflix. So the trade should be short Netflix and buy long. So we're going to buy the dips. Now, here's another thing I would like to show to my fellow option traders. This is a $140 call chart. Now, 99% of the people that trade options have never seen one. Call and put charts and how to work them, and what goes on in the option pit, and how those grease monkeys try to steal our money. And you know what I'm talking about. I bought these today. They were up here at $30 a contract yesterday for that 140 call. Today, watch this. The low was 510. That is what we call deflated. When they get deflated, my option trading buddies, you cannot stay at the bottom down here. Mathematically, it won't. When we look at imbalances, we're looking for these kinds of imbalances because when we look, we know what to do with the 140 call chart. That people that trade options, my friends, you guys are trading them, but you don't know what's really happening in there. So the put side of the market is at its extreme peak right now. And those put options that are inflated are not going to stay up there. It's mathematically impossible. And it is. So we're buying this one here. And because it's deflated, totally deflated. Hopefully this shows in the video. This was a 160 put option on ROKU. And they were deflated down here. Yes, they were. But now take a look at them. I hope it's in the video here. Because we went straight up. This is called inflated. It's totally inflated. They cannot and they will not stay up there. It's impossible mathematically. As a market maker versus a public option trader, let us bring this to you. Let us show you why you can get 100% better at options trading than what you're currently doing in the public model. So, once again, we were buying this. It's totally deflated on the 140 call. We know that the 160 put options and the put side of the market is totally inflated. So hopefully that put chart showed up and whatnot. But we're on sell because we went from 175 down here to 139. There is no bad news. They didn't miss earnings. There's nothing like it. It's called a rotation is what it's called. But they get on sale. And this is one that's on sale. So we'll continue to buy the dips and sell the rips. Just want you option traders to know one thing. When they are totally deflated, that's the time you want to be a buyer. You don't want to be buying options up here when they're at their highs. You want to buy them when they're on sale, when they're totally deflated. But you won't know that unless you know how to apply call charts, put charts, and understand what they do in the option pit. And that's what we're doing for you today, fellow option traders. Once again, 702-685-0772. Take that free 5-day trial. You don't have anything to lose. You will see it live. And you know what? Here's my promise. You'll go, man, I didn't know that. And it's going to solve a lot of mysteries around your option trading and how they screw option traders. So instead of getting screwed, get paid.